Well, let's talk workers' comp. One of the, let's start there with the state basically telling carriers if someone has COVID-19, they should they're encouraged to treat it as workers' comp. What are the pitfalls of the state doing that?
In the workers' comp contract, in many of the contracts, it says that this contract will exclude a virus or a pandemic or whatever the language is, very specific. And in this time of emotional, everybody, their emotions are off the charts. It's natural for elected officials and others to pound their fist and say, these claims need to be paid. I think the concept that our regulators have put in place, which encourages that the companies do what they can if coverage is available to extend that coverage and pay that claim. But in cases where it's not, you ask yourself the question of fairness. If I don't have a claim and someone does with the same workers' comp carrier, and the workers' comp carrier pays a claim that's not part of a contract, and it jeopardizes the solvency of my workers' compensation carrier, is that fair to me who never made a claim? Do we push so hard that the insurance companies must pay these claims to the point where they have nothing left to pay? And it begs the question, if I pump gas at a gas station and I'm on the job and I get the flu because there were germs on the gas pump, is that a legitimate claim? I can't answer that, only the courts can.
In the end, taxpayers are on the hook if a company can't pay claims, right?
Correct. When a company exhausts all of their ability to pay claims and go through their cash, we as the 20 million taxpayers pay that claim.
So it's the taxpayers of Florida who might be paying claims that would otherwise be excluded.
Correct. And if we have taxpayers that start recognizing that their insurance premiums are going to go up from the companies that are left that can still pay claims, how does that square when the originating contract shouldn't have covered it in the first place?
And the same thing is true for business interruption insurance, as we're talking. That's
So you've seen, Mike, where various elected officials, the governor of New York, the Broward County Commission, have issued emergency orders that very clearly delineate that COVID-19 coronavirus causes a physical damage loss. That is in response to business interruption policies that say we will not cover a business interruption, we will not trigger a business interruption claim unless there is a physical damage loss, and basically a virus doesn't cause a physical loss, even though these emergency orders say they do. So here's what the next step that will happen. I encourage those businesses that have business interruption coverage to file a claim. Once they file that claim, because there are prompt claim filing requirements in a business interruption policy, so promptly file your claim. Let the company do their due diligence. You'll probably get a letter that says, we reserve the right to deny this claim, but we're going to investigate it. And in the background, federal legislators, there's a 39-page proposed bill sitting in Congress right now that would set up a federal fund up to about $500 billion to pay these claims. So for small businesses, file your business interruption claim, even though you may have language that clearly excludes it, and let's see how this plays out from a federal standpoint, and perhaps your carrier may find a way to provide coverage.
So what happens if a carrier perhaps denies that claim and then, because Congress moves so slowly, which it may not do in this case, but I think we're looking at mid-May before they meet again. But you file the claim as denied and then Congress creates this fund. What happens then?
Interesting. I believe that the carriers across the country are sympathetic to the small business owners who are stuck in this, science fiction movie that we're all stuck in. And many of the carriers I've spoken to are reserving their rights to deny the claim based on the coverage, but want to explore getting it paid in hopes that during that time frame of them doing their exploration, because it's not a quick coverage decision. There have to be investigations into the books of the company and how much they lost, all that due diligence. By the time these claims are investigated over 90, 120 days, Congress may have acted. What we don't want to have happen, Mike, are a litany of court cases, because when the lawyers and the judicial system get involved, consumers lose. The small businesses will be standing on the sidelines, waiting for the courts to decide and not get a nickel.
And do you think a judge would uphold a county commission order that says the virus causes physical damage?
I would never speak for a judicial, appointee or elected official. If I were a judge, because I'd have to look at the parameters of the contract, I could not, in all good conscientiousness, award damages and a claim to an individual when it's very clearly stated in the contract. Our U.S. Constitution has a contracts clause, and it very clearly says governments can't intervene in those, and we hope those would be respected.
And let's, because we don't know when the end is in sight, and the Surgeon General says it could last a year, how can you file a claim now when you don't know the total extent of your damage?
Well, I think most businesses would probably have to estimate that. I mean, worst case scenario, best case scenario. If I'm communicating with my insurance company, I might say to them, here's my last year's revenues. Here are the next 12 months that I think I'm going to lose. Here's a worst case scenario that I think I'm going to lose. Here's a 3-month projection. Here's a 6-month projection. And work collaboratively with the insurance company. Your accountant or your CPA has those numbers and can project forward and see where that decision will lie. And it really will depend on, I think, what the federal government does as to the decision-making of the carriers. The carriers that I talk to are very encouraged by federal legislators wanting to help insure what many think are uninsurable, a virus, a pandemic, much like terrorism coverage. Back in the day, Congress passed the Terrorism Risk Insurance Act, TRIA, because terrorism is an uninsurable risk.
So all of a sudden we're going to have the virus.
PRIA, Pandemic Risk Insurance Act, is the proposed name or the concept behind the federal backstop for these insurance claims.
In some ways, you're advocating opposite points on two different kinds of insurance, are you not? With workers' comp being told to pay it, it's cost us all money and maybe bellies up the company. But on this other end, you're saying go ahead. Is it because there's no one is offering a federal backstop to workers' comp? Is that your reasoning?
In all of this, the taxpayers are going to pay. Whether we pay for it in higher cost for, goods and services that we buy because claims have been paid when they shouldn't have been, or vice versa, or maybe claims have been paid when they should have been. We're all going to pay. There's no free lunch. We're all going to pay for this in the end. We're going to pay for the CARES Act and the $2 trillion in stimulus. We'll pay for it if a company goes belly up and the rest of us are left to cover those claims. And we're going to pay for it if the government mandates these claims get paid and all of our premiums go up. In the end, we all pay for it. So the question is, do we want to all collectively agree to pay for it, or do we want to try to stick to the four corners of a contract and decide if it should be paid or not?